April 11th, 2026, 10 stories, all of them wild. Let's get into it. Today's sponsor is Compete Token, the gaming crypto that actually has real games. Link in the description. Trump's crypto project borrowed $75 million using its own tokens as collateral, and it's going exactly how you'd expect. The World Liberty Financial Token WLFI hit a new all-time low of about 7.7 cents on Saturday, down 83% from its peak of 46 cents last September. The reason? A wallet linked to the project deposited 5 billion WLFI tokens on Dolomite, a tiny lending platform co-founded by WLFI's own chief technology officer, and borrowed 75 million in stablecoins against those tokens, then moved 40 million straight to Coinbase Prime. One crypto analyst summed it up perfectly. It's the financial equivalent of printing casino chips, borrowing cash against them, and telling everyone not to panic because the house still believes in the chips. World Liberty Financial says the position is well above liquidation and is generating yield for users. That may be true, but when your token is down 83% and you're using it as your own collateral on a platform your CTO co-founded, the vibe is not great. Bitcoin bears are about to get wrecked. Open interest just hit 24.2 billion and the short squeeze is loading. Analysts at CryptoQuant say Bitcoin is crowded with short positions. Coins are flowing off exchanges while funding rates hit their most negative level since February. Open interest at $24.2 billion is the highest since early March, and it's been persistently negative, meaning shorts are paying longs just to keep their bets open. Trader Michael van de Poppe flagged that large volume speculators have flipped net long again, mirroring the exact setup before Bitcoin's massive breakout in 2023. Too many shorts, not enough sellers left to push the price down, one spark away from a cascade of forced liquidations. Bears loading up at $73,000 better be very sure. The Bitcoin market is splitting in two, and the buying side is a very short list. On one side, strategy now holds nearly 767,000 Bitcoin and keeps adding 4,871 coins just this week. US spot Bitcoin ETFs absorbed 50,000 coins in March. On the other side, Bitcoin whales reversed 400,000 Bitcoin from their biggest buying spree to their biggest distribution cycle ever recorded, and listed miners including Riot Platforms and Mara dumped 19,000 Bitcoin in a single week. And Bhutan, the only country that built a Bitcoin treasury through its own mining operation, has sold 70% of its sovereign stash over 18 months, going from 13,000 coins down to under 4,000, and may have stopped mining entirely. Strategy buys more Bitcoin in a typical week than Bhutan has left. The institutional floor is holding the price, but it's a very narrow floor. Watch 73,000 closely. Hyperliquid is getting a spot ETF, and Bitwise just filed its ticker and management fee, which Bloomberg's top ETF analyst says means launch is imminent. Bitwise updated its SEC filing with a 0.67% management fee for the proposed fund. Bloomberg senior ETF analyst Eric Balchunas noted that Hyperliquid's token is up 200% over the past year, and that Bitwise is clearly trying to strike while the iron is hot. This is a three-way race. Grayscale and 21 Shares both have competing filings. Bitwise was first in September, and is the only one to include staking yield in the proposal. Hyperliquid just broke into the top 10 crypto derivatives platforms by trading volume in the first quarter, putting it just shy of Coinbase. A spot ETF wrapping that kind of growth would be a massive deal for the whole DeFi space. Morgan Stanley says they're not going to stop at Bitcoin, and when a firm with 9.3 trillion in client assets says that, it matters. The bank just launched its own spot Bitcoin ETF with a lean 0.14% fee, among the cheapest in the industry, and pulled in 46 million in early net inflows. Head of digital asset strategy Amy Oldenburg confirmed Ethereum and Solana ETFs are coming, that a tokenized money market fund is definitely a path forward, and that crypto tax loss harvesting via their parametric subsidiary is on the table for wealthy clients. BlackRock's Bitcoin ETF is sitting at 53 billion. Morgan Stanley probably isn't catching that, but 15,000 wealth advisors now pitching crypto to the richest client base in America means a massive new pool of capital is about to discover what a digital asset wallet is. The biggest house on Wall Street just flipped the switch. SpaceX swung from $8 billion in profit to a $5 billion loss and didn't sell a single Bitcoin. Arkham Intelligence data shows SpaceX is holding 8,285 Bitcoin, worth about $603 million in Coinbase Prime custody, a position that hasn't moved since mid-2024. The loss came from integrating xAI, Elon Musk's artificial intelligence company, which pushed costs past the company's $18.5 billion in revenue. SpaceX is now the fourth largest known corporate Bitcoin holder, behind Strategy, Marathon Digital, and Riot Platforms. They're heading into an IPO where new fair value accounting rules will force them to put that $600 million on the public balance sheet. When a company bleeds $5 billion in a year and still won't touch the Bitcoin button, that's not a treasury decision, that's a conviction statement. Hong Kong just issued its first stablecoin licenses, and the regulated crypto era in Asia is officially open. The Hong Kong Monetary Authority approved two inaugural issuers, Anchor Point Financial, a joint venture between Standard Chartered, Animoca Brands, and Hong Kong Telecom, and HSBC's local Hong Kong banking arm. Both cleared under Hong Kong's brand new stablecoin regulatory framework, which regulators had been building toward for months. Boring? Maybe. Important? Absolutely. While the US is still locked in debates over whether stablecoins are currency or securities or some kind of magic internet crime, Hong Kong is licensing them with major banks as issuers, and Europe has its MiCA crypto regulation already live. The race to become the global hub for regulated crypto finance is not waiting for Washington to figure it out. The CFTC just built an innovation task force, and for once, a regulator is actually being constructive. Chairman Mike Selig announced 5 inaugural members, former crypto lawyers, blockchain advisors, and derivatives veterans tasked with building regulatory clarity for digital assets, prediction markets, and AI financial systems. The CFTC also launched an innovation tracker site documenting all its pro-crypto work under the Trump administration. The Clarity Act, the major crypto market structure bill, still only has about a 30% chance of passing Congress this year according to Wintermute, so regulators are building the framework themselves while Congress debates. After years of regulate by enforcement where every token launch was treated like a securities violation, watching a regulator actually staff up to help innovators is genuinely surreal. Don't pop the champagne yet, but this is a good sign. Chainalysis is warning shippers paying Iran transit fees in crypto is a federal sanctions violation. Senior intelligence analyst Caitlin Martin told Cointelegraph that any company paying Iran's Revolutionary Guard Corps in cryptocurrency, even for passage through key shipping waterways, would be providing material support to a sanctioned regime, triggering violations under U.S. and international law. Iran has already been using stablecoins to trade oil and weapons and may push to collect shipping tolls in crypto. Here's what Iran keeps missing. Crypto is actually easier to trace than most traditional sanctions evasion. Blockchain transactions are permanent, public, and traceable straight to the cash-out point. Iran thinks the blockchain is a shadow economy. Chainalysis and the US Treasury think it's a surveillance ledger. Spoiler, they're right, and there's a permanent receipt. Ripple's XRP is showing every classic macro bottom signal, and the data has actually been right before. XRP's relative strength index against Bitcoin just hit 24, the most oversold since the October 2025 flash crash, a reading that historically preceded 65 to 345% XRP price breakouts in prior cycles. The MVRV Z-score, a market value to realized value metric, is hovering near zero, which historically marks accumulation zones where downside exhaustion sets in. Key level $1.25 to $1.30, nearly 1.7 billion XRP were purchased around that support zone. Those holders are not selling easy. If the floor holds, analysts see a near-term bounce toward $1.70. If it breaks, the bear flag target is 80 cents, 41% down. Bulls have the data on their side right now. They just have to hold the line. That's the show. Don't forget Compete Token, Real Gaming Crypto. Link in the description. April 11th, 2026. Crypto Pulse out. See you tomorrow.